Well, hello, good morning, and welcome everyone. It is Monday, June 9th, and this is the AgYield War Room. I'm AgYield's marketing manager and everyone's favorite backup host, Jack Coakley, filling in for Dan today. Happy to be here, happy to be back. It's been a while. I'm happy to report that over the weekend I was at a family golf outing known exclusively as the Coakley Classic, where there were three different awards you could win. You can, of course, win it all. You could win longest drive or you could win longest putt. But there was a secret additional award you could win that I ended up taking home, most Malort consumed. And there it
Wow.
is. There I am.
Now that is
Wow.
impressive.
Now, and I would have won had I took two sips, but just to make sure I brought the trophy home, I drank half the bottle. So very excited.
Disgusting.
That's a great
Yeah,
outfit,
right.
by the way. I mean, great hat.
Oh, thank you. So
You're welcome.
anyway, lots of exciting things going on there. I'm sure my son and my wife are extremely proud that empty bottle is on the shelf in my office at home. Anyway, with that out of the way, feel free to join the discussion. Post a comment. Email us at info@agyield.com. We'd love to hear from you. Enough rambling from me. Let's go to Brian with some overnight numbers.
All right, thanks, Jack. Overnight started a little friendly here, but looks like 6 to 10 on both models got a little bit wetter. So July corn ended up down 2 3/4 at 439 3/4. July beans up fractionally just a quarter higher at 1057 1/2, and July wheat down 10 1/4 at 544 1/2. Stock market just up fractionally, so nothing really there.
Thanks for that, Brian. Let's start today's conversation with Dustin. Dustin, give us your thoughts, and then we can work it around the room from there.
Yeah, we were just talking before the show. Corn just seems to find a lot of weakness. All of a sudden, it just you can't give corn any sort of room without what appears to be maybe a managed money fund selling it on the slightest bit of strength. We did have, I would say, a pretty favorable forecast over the weekend. It was a bit wetter again in the 10-day. But, one of the things we did see on Friday's afternoon CFTC report was that funds sold a lot more corn than expected. So they continue to get short. We saw the front end of the market get beat up pretty bad as well. Traded new lows for the move last week in July D's. We haven't hit the contract lows for July D's yet, but certainly a lot of signs of managed money selling. And you're also coming just that last part of the July contract where anyone that hasn't moved their grain yet out of the bin or on basis, there a lot of that could be happening here in the next 20 days, and maybe the market's getting ahead of that too.
Sure. Justin, anything to add there?
No, I mean, I think we've talked about, this for quite a while now. It's where you've got this set up where it's hard for corn to go make, new lows yet. And at the same time, you're June 9th and the weather is too good to hold rallies. So the funds are comfortable getting short on rallies. Like Dustin said, you've got old crop corn that's getting cleaned out, farmers freeing up some cash, now that they have the crop planted. So we're it's kind of boring. We're just kind of stuck here. I mean, we're China and the U.S., set to meet in London this week to discuss some trade deal stuff. But really, there's nothing new fundamentally to really take us higher. You've got the June stocks and acreage report, at the end of this month. You've got a report on the 12th this week. So you kind of need some, in my opinion, you need some new information to take us to a new range. We've kind of been in this, call it 460 to 430 kind of corn range. We poked to 480 early in the year, then 470 was the high, then 460. So it's just been grinding. It's, rallies are less impressive, as we get more confident on the crop. And I think the market is trading that we're going to probably pick up some more corn acres. So I think that's going to be the next fundamental thing that'll be important is what are those acres at the end of the month. And then obviously that's the same time that we're kind of going into pollination window and see what that weather looks like. But weather's just not threatening enough right now to sustain any kind of a real rally.
Certainly. Ben, you got anything to mention on your end?
Yeah, I think we've officially entered weather map season, and the latest flip was a little bit wetter. Long term still hold, I think, some potential, but with 95 million acres, I think it's going to be, you're going to have to show me something before we really latch on if we do. So, boring markets, second day of the Goldman roll. Uh, I think that's worth keeping an eye on. And then WASD on the 12th. So I don't expect a lot to extend ranges in the next couple of days unless we get some really positive news from meetings with China.
Yeah, nothing really big in the way of fresh news. Jason, I know sometimes you get queued up for Northern Illinois stuff or weather stuff. Any comments from your end?
Yeah, not much to add. I agree with everybody. We're trading weather right now. Corn is going to be more susceptible to these models here over the next few weeks. Beans not so much until we get further into July. Yeah, Northern Illinois, Jack driving around looks fantastic. I think the heat recently, you really see the corn kind of taking off quick. So, I mean, if we continue, obviously raining, it is going to be a boring market, and eventually, we'll kind of grind lower. It's too early. I think the market thinks it's too early for that to happen yet, but you can see just price action, right? We have these little rallies when we get too cheap, and then I think to Justin's point, it's that the weather's been too good to really, kind of caps all these rallies, and we just kind of bounce around these moving averages. We kind of go up to some, quote unquote resistance levels, and then the weather's good enough where it kind of fails, and the funds feel comfortable staying short and getting shorter, as they get verification that we don't have any weather problems. So I think that personally continues, over the next few weeks. And, if weather changes dramatically, we could just be choppy markets, right? It seems like we get these years where, the weather models flip a lot. And then I think the market is going to react to those. We kind of have these, few weeks where we rally and few weeks where we break. And, it's going to become more important, as we get closer to that pollination window. So, yeah.
The other thing to add to that too is like, we talked about this, the fact that they've put these really big carries back in the market for the new crops. And we're at really wide levels for this early, like December 25 versus July 26 corn, for example, at a 30-cent carry. November beans, to May or July with 40 plus cent carry. And when they're in these when they have big carries, the funds like to be short, right? Because they get paid to be short because they're rolling at a carry, right? When you have inverse, it's the opposite. When there's inverses, the funds love to be long because they can be long, get out of their long, roll it to the next contract at a cheaper price. So that kind of, dictates some of their action too. One of the reasons that the funds love being short wheat, for example, is that there's generally big carries. So it kind of pays a dividend to be short. So we have extremely wide carries. Thinking about things that you could do as a farmer is really pay attention to some of those kinds of things. You can't really, you have no control over what the flat price does. But when you start looking at new crop and you look at your crop insurance levels, you look at some of those things, and you look at, if you have storage, maybe trying to figure out where you have hedges on. If you do, maybe taking advantage of some of those carry markets, is a thing that you can control. So I would advise to be, kind of looking at that. These are the widest carries we've seen for this time of year in quite a while. So maybe that's something to consider when you're thinking about, if I do place hedges, if I do get into some, whether they're min-max accumulators at the elevator, whatever kind of strategy you're looking at least kind of, look at, where you're placing your hedges and look at some of those advantages potentially.
Yeah, and just on that front, we break down markets as a grower that has on-farm storage. You have three components to your price. You have, the flat price. You have the value of your on-farm storage, which is the futures carry and the basis carry, and then you have the basis. So when you have, the stars don't usually align where you're going to have a high flat price and large carries and a good basis in the end. They don't usually align at once, but they often can be the case where at any given point in the year, one side might be more favorable than the other to lock in. And this is a very unique situation this time of year to get this wide of a futures carry for things like beans and corn. When, look at the bean balance sheet, for example, we actually have a really tight balance sheet at a record never seen before yield projection. So now, is that to say that the market's wrong in pricing that large of a carry? No, it's not to say that, but to know that you can pick up 43 cents of something you're going to store anyway to that time frame, it's a good time to potentially lock that side in, even if you haven't fully locked in the flat price. And even more so, I think, for corn. Today, December corn sits at 443 and a quarter. If you have ECO or a different form of a coverage that's 95%, these are coverages off the December contract. So if you're going to be delivering off of a July contract, July 2026, because you plan to store it to that point anyway, then your insurance, which may be technically it would be in the money if county hits average yield, it's protecting a delivery period that's not really yours at the moment. There's actually a chance that spread narrows again at some point in the year. It's often been the case where we're much narrower than 30 cents, during that summer period. Again, not to say that it's going to do that, but I think a little bit of this weather that's maybe in the longer term forecast, the 3 to 6 week time frame, it is a bit drier, especially in the west, depending on where this ridge sets up. That can all go to the wayside as we get closer and a more higher confidence forecast comes out. That may change, but I do think it's interesting how wide the spreads have gotten, how short the funds have been confident to get when we really haven't seen pollination weather and we have a glimpse of maybe not the best forecast. So we'll see what happens, but just back up what Justin's saying, there are ways to get technical with it and potentially lock the carry side in.
Oh, very good. Thanks for that, guys. Let's transition over to livestock. Ryland, what do you got for us?
Well, we got new highs in the cattle market. On Friday, we saw cash markets just rip. We saw 235 in the south for cash.
Ryland, it appears we have lost your microphone completely.
Oh,
is it back?
Strange. I think we're back. All right. So new highs again, pretty much all around the horn. Better cash, better.
You're doing a bit, aren't you?
Continue to buy. So overall, it just kind of seems like it's more of the same. So we've got funds adding just slightly. I think the buying may be slowing down on their end.
There's no way.
I'm sorry.
I can hear him. He's sitting right next to me, but
you just say what he says.
Just say what I say. I don't know what's happening.
It's grilling season. Beef prices are record high.
Record highs. So, you got that? I mean, honestly, we're just
bye.
Yeah, bye. That pretty much sums up the cattle market. The hog side of things, same thing. New highs for the move. Seasonal demand really good. So just nothing new here. Everything's going up. Maybe we'll see if there's a surprise with China and the U.S. today to shake things out. But otherwise, especially in the hogs, the buying's really been accelerating. So nothing new there.
Well, thanks for that. I still believe you were doing like a ventriloquist thing, like you were just messing with me.
Yeah, it's Monday. I'm not that creative.
Well, any other notes from anyone before we wrap for the day? Nope. Well, fantastic. Thanks again for everyone who tunes in on a daily basis. Go ahead and give us a like and subscribe. It doesn't cost you anything to do so. It helps us out with the YouTube's algorithms and everything. It gets our content out to a larger audience. And we couldn't do it without you guys. We just passed the 700 subscriber mark. Very excited about that. Hopefully getting to 1,000 before the end of the year. Crossing our fingers there. And so be a part of this kind of growing community that we got going on. Like Dan always says, we are streaming live every day. The markets are open on X, Facebook Live, and YouTube Live. Appreciate everyone's thoughts and comments this morning. It's always fun being able to jump on here. We will talk to you again tomorrow at 8:15. Thank you very much and have a good day.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.